All right. Hello, everyone, and good morning. Today is January the 1st, 2023. Yes, right, folks. We are in a new year. I want to first and foremost say happy new year to everyone. Happy new year to all of you loyal followers who continue to follow me on YouTube and continue to join me within our Discord. Um, and as soon as I have the ability, I will show you guys Discord I'm trying to get a link from one of the guys who run the Discord, but I'm gonna show you guys where I'm at on Discord and where I post the same content that you guys actually seeing now. I normally post that on a regular basis on our Discord channel. So the minute I get a chance to show you guys that, I will show you guys that as well. And also for you guys, if you ever want to, hold on one second, folks. Gabby, hey, get out of that window. Again, folks, for those who don't follow me on my other sites, you can find me on Twitter, which is where I do share information from time to time. So my Twitter account is probably a good way just to follow me in general, just see what I got going and see what I'm up to. Um, again, I'm just a regular old person who does personal trading, so nobody's special anymore. I don't belong to a company. I'm just me. So you'll find everything on my Twitter page, from personal stuff to things about investing, things about the economy, things about life, things about everything. But here's my Twitter handle. As you can see, when you get to my page, you'll see my header. I'm Jesus, the author and perfecter of our faith. And just below that, you see my name, and you'll see my @ symbol, @God's Child Tim. So that is where I am on Twitter. So Twitter and Twitter and YouTube is the best ways to follow me. But also, if you'd like to, also have a Facebook account, and I post a lot more stuff on there just about life in general, my personal life, things of that nature. Nothing extravagant, but here's my Facebook page. This is my Facebook page. Let's see. So here's my Facebook page. And I will try to post a link to this somewhere. It is facebook.com/TimD, TIMD 88. TIMD 88. It's the easiest way to find me because there's a lot of Tims on Facebook. So TIMD 88, facebook.com/TIMD 88. That's how you can find me on Facebook. All right, now let's dive right into this, folks. This is probably a little longer video than normal. I haven't my first time with you guys. I'm showing you guys some of my content this year. And I think the market is about to get very, very interesting, folks. So pay close attention to what's going on this year, because a lot of geopolitical news is definitely going to affect our markets. The Fed is going to continue to affect our markets. Wars and rumors of wars are going to continue to affect our markets. Pay attention to what's going on in Ukraine, sorry, and pay attention to what's going on in China, which people ain't really talking about. But China, it's just been sitting back watching how the U.S. and the rest of the world, the U.S. and the UN, the rest of the world, handles Ukraine, because China's, you guys have been paying attention, but China has been strategically paying very, very close attention to Taiwan. And I believe China ultimately wants to try to find, get a foothold back in Taiwan, and maybe even try to overtake that country. So pay close attention to that. You always see the U.S. talk about back in Taiwan. If you remember, back sometime last year, I think when Pelosi went there, China started all these different, that's what I call it, war games and stuff afterwards. Prep war games, you know what I'm saying, because they were very upset that the U.S. went over there to visit in Taiwan. So we're not out of the woods by a long shot, folks. And I honestly, I think last year was just a tease. We had a lot of, ups and downs. Some stocks, most stocks did not have a good year. And I'm going to show you guys some of that here shortly. But I think 2023 may be the capitulation year. Capitulation is just when the overall market just finally starts to give up the ghost and really start to see some lower lows in another major way, probably worse than what we've seen already in 2022 and worse than what we've seen in 2020. So that's something that we need to pay attention to and be prepared for an event that that happens. Because lo and behold, folks, you guys know it or not, we are still not out of this bear market. This bear market is still in full force. Okay, all these short-term rallies you see, that's all they are, short-term rallies, and eventually they give up the ghost and go lower again. So I'm gonna show you guys a little rally that we've seen probably from October up until December, and then it's starting to fade out. And then towards the end of the year, 2022, we got that Christmas rally time frame, which is normally the last 5 trading days in the year and the first 2 trading days of the new year. So the markets are closed on Monday, which is tomorrow. Tuesday, Wednesday, markets open back up. We may see, I'm gonna show you guys, may see a little rally. So don't be surprised if we do. And but don't hang your hat on that, because it's not the beginning of a bull market, and I'm gonna show you why. All right. So with all that said, let's dive right into first thing we'll look at is, and I'm gonna look at multiple time frames, and we're gonna be looking at multiple time frames, gonna look at a couple of different sectors. We're gonna be looking at some individual stocks. So just to start off the new year, right? So this will probably be a pretty long, a little bit longer than usual. So, okay. All right. Now, this is the Dow Jones. This is a weekly chart of the Dow Jones. We're going to start by, first of all, I'm starting by taking a look at a daily chart of the Dow Jones to show you guys what the here and now looks like and what we can possibly expect as we head into the first part of the year. So we've been in an overall downtrend. If you notice that we kind of back in October, the market kind of like took a double take here. Show you guys that on a downtrend, we hit the lower part of this channel or lower part of this trading range, and then the market started to rally. So the market started a nice little uptrend up till around the end of November. And then we started to pull back again. But look what price action is doing. This red line you see I have in here, that's a 50-day moving average, 50-day EMA, 50-day exponential moving average. Look what price action has been doing, folks. Traded back down after this rally, came down, but then in November and December, look what it's doing. It's trying to hold the line. It's been holding this line probably most of December, and with the Christmas rally, just taking over towards the end of the year, it's trying to hold this line. But I don't think it's going to fare well. I think we're about to head lower in the near future. Now, in the near term, again, we still have what's considered to be this Christmas rally, which is at least 2 more days, trading days into the new year. And this is what the setup looks like. Here is the ultimate top that we top that we made it to in beginning of December. Then we traded down from this level back down to the 50-day moving average, and price action has been consolidating here. Could we see a bounce from off of this trend, off of this 50-day moving average? Yeah, we could, but I don't think it's going to be anything to write home about. I honestly don't think we're going back up this far. We had to see how this first week ends. I don't think we're going back up that far. I don't think so. Could it possibly happen? Yes, it could. But the bears are really starting to try to sink their teeth into this market and try to limit these bear market rallies, or to limit the the strength of the bear market rally. So we have to see what happens. But definitely I do look at a 4-hour chart. Definitely I think we could see, some type of little rally. Now, here's a 4-hour chart. So again, price action is right up to that 50-day moving average. We could see a little bounce here. Price action can go up just a little bit more. And if you're looking at the Dow, Looking at the near-term chart, if you look at where price action started to consolidate here, that would take price action back up to about 33,727. So it would not be surprising to me to see Dow Jones, pop another couple hundred points just to get people's lips salivating over the over this first week. But I think it's going to be muted. If we get a big rally, I think it's going to be a time to sell the pop, because let me draw this back out again. So if we do get a pop, not saying we are, but not saying we aren't, but the way the setup is, we could see a strong start to the year. But then if we draw this out, and let's take a look at some longer term charts. Here's a weekly chart first. Let's look at the Williams percentage. It's already starting to trend lower on the weekly chart. So Williams percentage is starting to head lower. Bull stochastics actually starting to head lower. CCI starting to look like it wants to head lower as well. So that's what the weekly chart looks like. But let's even back it up. Let's go out even further. And not only that, before I go out even further, not only that, let's say that. So price action managed on the weekly chart of the Dow Jones. Price action managed to get back above this 50-day moving average. Oh, ain't that sweet? But it's like it's petering out there. So this is the range. It just came back above its 50-day moving average and then came right back down to it, using it as a level of support on the weekly chart. So if we don't see a drop back below this level next week, I bet you before the end of this month out, we're going to see a drop back below on the weekly chart. And then we'll possibly head back to test these lows. That's my ultimate thought process for the month of January. I think we're going to end up breaking this 50-day moving average on the weekly chart and head lower again at some point. Again, you got all your major oscillators are starting to head lower. Now, let's even look at another picture. Look at the overall bigger picture. Let's break this out even further. Take a look at a longer term. I'm going to show you multiple time frames and show you what the ultimate setup is, folks, and show you how bearish this market really looks when you draw out and look at the ultimate time, some other time frames. So here is a monthly chart of the Dow Jones, and this goes back about 20 years or so. But I'm gonna point out a couple frames to show you guys the setup. So a monthly chart, price action traded back down to this trend line. This trend line right here, you see this solid white line I have, that represents the COVID ceiling in 2020. That's what that represents, the COVID ceiling in 2020, and then we plunged. Look what price action did. Price action made it back down to that, which becomes support and rallied. But look where it's doing. Look what it's doing now on a monthly chart. It is petering out. So over the next several months, I think we end up testing this level again. And this next test in 2023, I think it's going to break. And we're going to start to be within this range again. So that's something to pay close attention to between now and spring. I think these next couple of months are going to be very crucial for the bulls. The bulls really want to make a stand. January, February, and March, it has to have a higher high in these 3 months, but I don't think that's going to happen. I think we're going to end up breaking lower. All right. And if we break lower, folks, then at that point, we got to start paying attention to the 2020 lows, because that will be in play. That will definitely be in play. Now look at the Williams percentage. Got that nice rally. So Williams percentage, you see. Williams percentage, we see how we got that big ricochet off the bottom. And look what it's doing now, starting to hinge lower, starting to hinge back lower. So again, I think we are about to have a devastating 2023 for the overall markets. And then if we even look out even further, let's take a look at a quarterly and a yearly chart, folks. I'm going to show you guys something here. So even with you know, this green month that we had, sort of kind of for the Dow Jones, green this last quarter we had, which appeared to be green because October to December, the market got a bounce off of that low. Let's look at the full stochastics, how really look, even with all that rally, the oscillators in the full stochastics is not making a higher high. It is it's still trending lower. Okay, it has not really started a new upward trend. The oscillators have not started a new upward trend, folks. They are still trending down, coming into an area of resistance. That's what the quarterly chart looks like on the Dow Jones. And I will go even so far as to look at a long-term yearly chart that really paints a picture, folks, as to what makes me believe that 2023 and probably even further may not fare well for the overall stock market. So, okay. So if we look at the bigger picture, all right, this yearly chart, been in a tear since 2008. Nice run up. Then we get this big red candle in 2022. And I think we are at an ultimate top. 2022 may have marked an ultimate top for the overall market. If we take a look at, again, pay close to some of the signals, and then things that's happening within our economy. CCI is just on a yearly chart, just starting to hinge and possibly head lower. Wins percentage just starting to head lower, and it looks like we are definitely in an overbought sensation on the yearly chart. And I don't think this is going to last. I think we're going to start to see a big change in the markets. A big change in the markets that may last, that could last definitely throughout 2023. We may even see it even going even further. So that's food for thought. I wanted to break that down chart by time frame by time frame to show you guys what the overall theme is really. And again, we are not in nowhere near a new bull secular market, I believe. I don't think that's the case. If anything, we are at the top, at the end, really starting to show that we're at the end of a bull market and ready to head lower by looking at the longer term charts. All right. Now let's break it back down. Let's go back down here. All right. Now let's take a look at the S&P 500. All right. Again, as we approach this new year, we've seen price action in December kind of like trend back below this 50-day moving average on our daily chart. And now we're starting to see, a little bit of positive action. We got a little positive close on Monday where price action, where the bulls fought back. See this long shadow underneath this candle, pushing price back up. So with that said, we could see a continuation of the bulls fighting back as we start the week off with. But the problem is that this 50-day moving average, folks, it is going to act as a price magnet, which means because the price go up towards that 50-day moving average, as the 50-day moving average starts to do what it does once it takes over, and it already took over price. It's above price. So what happens? The price start to see one of these. What the bulls want to see is that the bulls want to see this 50-day moving average curl up. And I don't think that's going to happen. I don't think that's going to happen. So as price start to continue to rise, it's going to run into this 50-day moving average somewhere and get rejected more than likely, and then come right back down. So with that said, we could see, like I said, we could see a little bit more higher prices over the next couple of days. We have a gap above the market here. I don't think we're going to, get that far, but we have some resistance right around here. So I do believe we're going to could see a little bit higher prices, but again, I think it's all going to be muted. It's all going to be irrelevant because I think the bears are really going to take over in a big way as we head through the rest of the year. That's a daily chart of the S&P. Here's a weekly chart of the S&P. Again, it definitely doesn't look strong at all, but it does look like, you know, we could see a little rally here because both this is like we're at the end of a downtrend right here, temporary downtrend. So we could see a little rally, but again, look at the 50-period moving average, folks. It is definitely acting as a strong level of resistance. As we see what happened when we got to the top of that trend channel. See what happened when we got it there, and now we're really close. Got close to the just above the 50-day moving average here, and then pull right back. Then we came back up to the 50-day moving average again, and what happened? We got rejection. So we could curl up like this, but as we do that, I think the 50-day moving average is going to start to do this, and you'll see price action somewhere around there and come right back down. That is my ultimate forecast for the S&P over the next week or two. Now, even on if you look at a longer term chart, it's going to look just like the Dow, but even worse. The S&P and the Nasdaq look much worse than the Dow. And I'm going to show you. So this is a monthly chart of the S&P, and of the S&P. Yes, got up to that it made it back above, got that bounce off of the 50-day moving average on a monthly chart, only up to the top of this channel. And look what it's doing. It's coming right back down. Now look at the wins percentage. It didn't even get up to the overbought territory. It's hinging lower already. And this solid line down here is right where the 2020 highs were, and we could be ready to break back below the 50-day moving average on the monthly chart on the S&P, and then we're probably going to see a devastating downward trend. And here is a quarterly chart. Wins percentage, TTM squeeze looks like we're ready to continue to trend lower. Looks like the momentum is dying out for the bulls. And as you can see, the stochastic is heading lower, wins percentage, CCI, all heading low on the quarterly charts. And looking at the yearly chart of the S&P, the CCI is what I really want to look at, because the yearly chart shows the CCI is just starting to get a crossover or some type of sell signal, with the CCI starting to trend lower and sell signal crossover. So I think 2023 again is going to be devastating for stocks. So I don't think this bear market is nowhere near the end just yet. So that's my honest opinion, and I'm sticking to it. All right, let's take a look at the NASDAQ. Indices, NASDAQ. Okay, and the NASDAQ even looks even worse, because not only is it starting to trend lower, but this in 2022, look at this long red candle. It pretty much almost engulfs this the 2021 candle. So it's already in a dire state on the yearly chart. Look at the NASDAQ on the quarterly chart. Looks even worse. Look at the wins percentage. It's already down at the lower part where the oversold area is. Look at the full stochastic, still heading lower. Wins percentage. CCI still heading lower. And let's take a look at a monthly chart. Looks devastating. So the NASDAQ is really getting pummeled for folks. And look at where it is as far as its 50-day moving average on a monthly. It's below it and hanging right around here. So I think, and I'm gonna show you guys when I show you guys some of these FANG names, I think that the NASDAQ is really going to suffer in 2023 in a major way. So right now we are on a precipice of a breakdown in a big way, and we're already back or getting close to the area of the highs of 2020 breakdown. But the NASDAQ, it looks like death. It's detrimental. So here's a weekly chart of the NASDAQ. Now we got this little green or long shadow that we shown last week with the bulls fighting back. So we could see a little rally, but I think right around in this area somewhere, I think the NASDAQ is going to struggle to maintain its rally. So right around here somewhere, even if we get that far, somewhere around here, you can see the NASDAQ struggle to get out of that range. So it may stay in that tight range for the next couple of days, maybe throughout this week. But I think ultimately, before the month is over, we're going to see lower prices. Here's a daily chart of the NASDAQ. Again, you see some positive momentum as we enter towards the end of the week. So we could see a little rally here. But again, I think every rally is going to be muted. It may look like the bulls are taking over in a big way. So these rallies could be fierce over the next couple of days. But I think it's going to run into resistance as the 50-period moving average on the daily starts to curl lower. And price action will find a way to run into that area and you come back down. All right, so that's what the NASDAQ, the Dow Jones, NASDAQ, Dow Jones, and S&P looks like. Let's take a look at the Russell 2000. Is our Russell again in the short term? It is looking out, sticking around over sold territory. So again, same scenario. Could see a little continuation back up to this trend line. More likely right back, take it back up to the 50-period moving average. And then I don't think we're going to break out into a new bull market. Instead, I think we're going to run into this area somewhere, maybe stall and then come back down. Here's our weekly chart of the Russell. Again, it's just like a pattern that shows that the market wants to have a little rally. It's like a bottoming process right here. So we could see like a little rally before we possibly head back down. Again, I don't think we're going to break out into a new bull market. I do think we could see a little rally starting off the week as trading week starts, but I think it's going to be muted. As you can see, what happened when we got this little rally up to the 50-period moving average. See what happened? Came right back down. So what do I expect to happen? Maybe the same thing. Rally back up to that 50-period moving average and then come right back down. This time, if we hit this 50-period moving average and then come back down, I think we'll break these lows, start to test these lows. And that's on all the major indices. Now, let me see one more. Yep. So Russell looks like the others. It's all showing these devastating downward trends on the longer term charts. Now let's take a look at a daily chart of the VIX. Now, with price action setting up for a possible rally, the VIX does not look like it wants to give up the ghost, folks. So I think the VIX, we could see a little bit lower prices in the VIX, but I think the VIX is now it's in an accumulation phase where it is just setting up. A nice little bottoming process has been forming in the VIX. I think after next week, we see the VIX get out of this range and really start to catapult higher. So either by the end of this week or beginning of next week, I think we're going to see the VIX get out of this range because it's just consolidating. Look at the full stochastic. It's just consolidating. Williams percentage is already starting to head higher. CCI is trying to cross with the buy signal. The VIX has been consolidating, folks, and ready for a breakout. So that's something to pay close attention to. All right. So that's a look at the major indices. Now I'm going to take a look at a couple more things before I head out of here. Again, I'm going to show you how weak this overall longer term market is. And here's a look at Netflix. This is a daily chart of Netflix. So those who are looking for, a bull market, you ain't gonna find it, and especially in these FANG stocks. Same thing, back down to, yes. Take it to who? What's for? For you, for the drums? I figured that's what it was. She said, keep it up there. Oh my goodness, what am I have to have? Okay. You only had a charger for it. I ain't give you the charger. Huh? Yeah, please bring it home with you. Just make sure you take it with you every Sunday. All right. Had to pause for a second, folks. But again, so here's how Netflix entered the year, and it's the same scenario. It looks just like the overall markets. So you got this choppy trading session towards the end of the year, in December. Look at this tight range. Now, I will say this. Now, again, I don't think we're going to break out another bull market like that, but I do think we could see a possible rally as we head into the beginning of the year. Could see a slight rally up here because there's an open gap above price action on Netflix. So could we rally up to that area? That is a possibility. Are we going to break out to a new bull market? I doubt it very seriously, but I do think we could see a little bounce in some of these FANG stops. Everybody will call them FANG stops over the next couple of days or so. And I think that it's going to be an opportunity where the bears are going to jump in and really push price action lower. So don't fall in love with any rally you see. Don't think it's going to be sustainable. I do think we could see a rally and then possibly head lower. Eventually, I think all markets, they're going to give up this 50-day moving average on the daily. They're going to give it up, and bears are going to take over. So that's my observation. That is what Netflix looks like on the daily chart. Weekly chart of Netflix, the weekly chart of Netflix, it looks weaker because Netflix has had a almost a market bottom rally since about July. It's been trending, trying to trend higher since this big drop off. Since this big drop off from November of 2021 to April of 2022, Netflix has been trying to recoup some of those losses. But guess what it's running into? Resistance, folks. It's running into heavy resistance on the weekly chart right at this 50-period moving average. And since we made it up to that level, look what Netflix has been unable to do, which leads me to really believe that it is nowhere near coming back up towards any of these highs anytime soon. It has stalled out. Since that move from April to now, it has stalled out on a monthly chart, on a weekly. This is a monthly chart, weekly chart. I didn't lost track. I think this is my weekly chart. So yeah, price action has stalled out. Back up to that 50-period moving average, and look what it's doing. Heavy resistance. It cannot break this 50-period moving average on a weekly. And look what's starting to happen already. CCI starting to trend lower. Williams percentage starting to trend lower. Stochastic starting to trend lower. TTM squeeze starting to lose upward momentum on the weekly chart. And there's an earnings coming up soon, sometime in January. So we have to see how that pans out. I don't think Netflix is going to jump out into a new bull market. Ultimately, I think it's going to fail this 50-period moving average on the weekly chart, I think, and possibly head lower. That's Netflix. And then if you look at the monthly chart of Netflix, it looks even more dire because ran right back up to that 50-period moving average, and look what it's doing. It's like it's stalled out right there. So if Netflix doesn't find a way, if the upcoming earnings, which is on January 19th, doesn't find a way to break, to give Netflix enough boost to break back above this 50-period moving average on its monthly chart, look out below because it's probably going to see more lower prices. So Netflix is pretty much at a standoff right at there, 50 moving average. That's Netflix. Ultimate Tesla that everybody really wants to chase. Doesn't look any better, folks. Does not look any better. Temporarily, again, these stocks are sold off a lot, so it would not be surprising to see a little bounce. And I do mean a muted bounce and then an immediate reversal. So Tesla, I think, is also in the same boat. Got down to as low as 108, and look at it bouncing. And then and on the way up, it got some gaps in the market. And those gaps act as price magnets, folks. Keep that in mind. So gapped up, gap in the market here. So eventually, price action is going to want to draw back to that area. In the meantime, between time, if we do see a slight rally, you could see another move up, but I think you're going to see this 50 moving average starting to come down. So we could see, if the market rallies on Tuesday and Wednesday, we could see a little rally in Tesla as Tesla continues to move up. But then these gaps, this gap is probably going to draw it back downward. So longer term, look at Tesla longer term, it looks devastating, folks. This is a monthly chart of Tesla. This is what I really wanted to point out. Is that this is a long red candle that formed in December. And I don't think that, I think this is just the beginning of a sell-off in Tesla. I think Tesla is going much lower in 2023. Okay, we're already below this 50 moving average on a monthly chart. Will price action rally enough to overtake it? I don't think so, especially with the overall economy and overall market still in this bear phase. Could we rally up towards this 50 moving average? Yes, and that could be significant. If we do get that far, but if we don't, I think price action, I think the 50 moving average on the weekly is going to start to trend down, and it's going to draw price action to it, and then another reversal. So we could see a nice little continuation and rally in Tesla over the next couple of days or so. But I don't fall in love with it. Me myself personally, because it's hard to see where these prices stocks will rally to, especially ones that have been sold off so much. I'm waiting on the big pops, and then I just continue to trade the overall market lower. I think the bears are going to make out better than the bulls in any stretch of time over this next year. That's a look at Tesla. What about Meta? Meta platform, same thing. It's starting to trend higher as well, but it looks sort of like Tesla did. Had that long stretch of down, and then at the end of November, we're starting to trend higher. But look what's happening as price action is trending higher. The 50 moving average is going lower. So if we do see another little, like rallying here, we got the wins percentage headed higher, full stochastics headed higher, CCI headed higher. But look where the moving average is. They're headed higher, and prices are barely moving. These full stochastics, wins percentage, CCI oscillators heading higher, but price action is barely moving. It's barely ticking higher. So that leads me to believe that price action is going to end up running into some resistance here. Maybe see this 50 moving average continue to head lower. Price action stop somewhere just below that 50 moving average and head lower again. That's what I ultimately think we're going to see, because if you look at a longer term chart, price action is just on a quarterly chart, it's just hovering just below its 50 moving average. Not a good sign for the bulls. Yeah, so Meta, again, you could see a little pop, but here's a yearly chart. Just had a bad year for Meta, and it's right at the 50 moving average on the yearly chart. So we could see a little bounce, but I don't think it's going to be. If overall markets don't turn bullish in a big way, I don't think FANG stocks will turn bullish in a big way. So that's some food for thought. Look at Google. Same scenario. Daily chart of Google. Again, there's some bullish momentum that's building here. So we could see a little, like I said, another little rally. But we got the 50 moving average right over top. whatever rallies we have, it could be quick. It could be quick. And if you hold the bag, you're gonna get caught holding the bag if you don't get out, as soon as we see a pop. Because I think eventually it's gonna run into this 50 moving average and start to head lower. Again, I'm not, who knows what's going to happen 100%, but what I do know is that price action is muted below these 50-period moving averages. So we could see a little pop and then eventually, run into resistance somewhere between price action and the moving average and start to head lower. Here is a monthly chart of Google. That even looks even more devastating. So December was a really bad month for Google, as you can see here. Price action is just stuck right at that 50-period moving average with a big red candle that's forming on the monthly chart. I think we will break this level and just continue to head lower eventually as we head through the course of the year. Here's a quarterly chart. All right. Two more we look at. Look at Amazon first. Amazon even looks even worse. But look at this definite downward trending channel. This is on a quarterly chart, folks. Definitely in the downward trending channel. And it doesn't look healthy at all. This is a quarterly chart. Price action is right back at its 50-period moving average on a quarterly chart, folks, and like it's ready to break it. So this is probably going to be a real bad year for Amazon. Here's a monthly chart. And again, just because it's been a lot of selling going on doesn't mean that more selling can't take place, folks. Keep that in mind. It is definitely in this downward trending channel in a big way. Here's a weekly chart, and look, Amazon just looks devastating. It's just melting lower. Now we could see a little rally again. It's just like everything else. Look at a short-term daily chart. It just looks completely oversold. It doesn't like it wants to go much higher or lower. So we could see, another lower rally. Not much, and Amazon is barely moving. But I think we start to see big time movement downward in the overall market. I think Amazon will run into resistance right around these 50-period moving average and head much lower again. So Amazon definitely doesn't look healthy. Last but not least, let's take a look at Apple, folks, because Apple to me has been one of the beacons of light. If you look at some of the longer term charts of overall markets. Now, even though, I'm going to say why I said beacon of light, but even though it made it out to a high of 176 back in August, and since then we have really trended lower, made it back down to this 50-period moving average, has been using it as a magnet, and then suddenly around the middle of December, it really dropped below the 50-period moving average. So now we're trading around 130. We was at 176 in August. Now we're at 130, around 130. So with that said, again, with Apple, same as others, I do think we can see like a little bit of a bounce here, maybe back up to 135 to 137 somewhere, and then possibly head, and then definitely, I think we're definitely going to head lower. Look at the longer term chart in Apple. This one really looks like Apple looks like it's really ready to give up the ghost, folks, and I mean in a big way. So here is a monthly chart. Look at this longer term upward trending channel that we were in from 2018 all the way up into 2022, and then look what happened. Look at the devastation. Look at the price action. It's been really very volatile, but trending lower from 182 down to where we are at now on a monthly chart. You can see that, and look at the full stochastics. Definitely started to trend lower in a big way, and I think that is going to remain. Wins percentage on the monthly chart trending lower in a big way. CCI trending lower in a big way. I think that will stand firm and continue in 2023 until the market starts to find some type of tradable bottom. There's a quarterly chart of Apple, which makes me believe that Apple's we can really see a big move down with Apple, folks. I really do think it's going to happen. I think Apple will end up just like the others on a quarterly chart where it finds a way. I'm not exaggerating, folks. Where it finds a way to meet price action at the 50-period moving average on a quarterly chart. So the next several quarters, or next 4 or 5 quarters, so 2023 in general, I think it's not going to be a good year for Apple. We could see Apple, again, look at how 2022 was for some of the other FANG stocks, how they made it back down, some of their pandemic lows. I think Apple in 2023 will eventually end up down towards its 50-period moving average on a quarterly chart. So could we see Apple drop below 100 by before December of this year? Yeah, that is a possibility. Before the end of 2023, we could see Apple back below $100, folks. That is a huge possibility. Look at this weekly chart. I mean, quarterly chart. Looks like it's just ready to fall off a cliff. So keep that in mind. For those folks who want to be tempted to trade Apple because of the name, don't fall for it, because I think Apple is getting ready to see some major weakness in 2023. Again, here's a monthly chart of Apple. I want to point this out, how close Apple is on a monthly chart to breaking its 50-period moving average. I think by springtime, we'll definitely see Apple give up that 50-period moving average on the weekly chart. Yeah, I'm sorry, on the monthly chart. All right, folks. That's that. Now, take a look at one more thing. Let's take a look at gold, because gold, folks, I think is showing a strong setup for a bigger move overall. All right. Here is a monthly chart of Apple dating, of gold dating way back to 1980s, 1985, sort of so. And over the course of the past 20 years or so, gold has been pretty interesting. It's been very volatile. But if you look at what happened right around 2005, there was a nice little run up in gold up to a certain point, 2005 to 2008, and then you hit a peak. And look what it's doing. It came back down. Like it started a little bottoming phase right around in here. And then price action came back up, only to run into an area of resistance. And what did it do? Came back down, but look what it did. Came right back down to its 50-period moving average on its monthly chart. And it looks like it's starting to head higher. So gold looks interesting, folks. It looks like a pattern was formed. So from here, do we continue to move higher after we had this bottoming process, and then pull back right back towards 50-period moving average, and then like it's starting to take off again? That is a huge possibility. If we look at the full stochastics, I think this year could be a good year for gold. Full stochastics is starting to head higher already. Risk percentage heading higher. CCI crossing over with a buy signal on a monthly chart. So 2023 could be a good year for silver and gold. So gold and silver could see a good 2023. We have to keep that in mind. If you were wondering about gold and silver, again, this is a monthly chart. And as I zoom in here, you see how from 2011, we came back down into this area and traded back above the 50-period moving average up to a certain point in 2020. We sold off, and then we sold off again, only to hit the 50-period moving average and then start to hold that level as a level of support and start to head higher. So is this the year that we see gold break out above these ranges? We have to see, but right now, the overall momentum is to the upside. All right, folks, that's all I have for you guys. Hopefully, this is pretty long, but I wanted to do that purposely because this is the beginning of a new year. So I wanted to give you guys short-term outlook, and then look at the broader picture of everything. So that's food for thought. All right, folks. Hopefully you guys have a great new year. Enjoy the rest of your weekend. Enjoy the rest and have a great 2023. I wish you guys a very, very prosperous 2023. And again, be nimble, be quick. Don't fall into any of these bear trap rallies the market is about to fool us with, and pay attention to gold. We're back above 1800, folks. And it has been holding that 1800 level. That's something to pay close attention to. All right, folks, enjoy the rest of your day, and I will catch you guys on the next video.